The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials right now trading down 621. NASDAQ is off 292. S&P's off 77. Gold contract down $35, trading 1876. You got silver down $1.26, $23.28 an ounce. Light sweet crude off 220, $37.38 a barrel. Notes and bonds. The 10-year up 5 ticks, trading 139 flat. 30-year up a half a point or 17 ticks at 174.20 in King Dollar. King Dollar's up 527 ticks, trading 93.470. The euro is at 117. The yen is at 104.28, and the British pound is at 129 to 1 U.S. dollar. Tom O'Brien, what's going on?
We got enough action going on in this market. 30 minutes into the trading day yet? That's quite a chart you got up there in terms of just your regular screen. The only thing green on the board, right? Notes, bonds, and the dollar.
There's no doubt, man. And, you know, bottom line, folks, is that, yeah, we have green here. But now watch this for a second. So the NASDAQ's down 2.5%. You get the S&P's down 1.9%. And you get the Dow Jones down 2.1%. That being said, when you see this screen right here, and if you see what's happening in Europe, my take is that we got farther to go down because we're in confirmed ABC structures down on the S&P and the NDX 100. And I'm going to show you a larger one that is broken today, and this will bring us to the lows of September. You can see when you're looking at Europe there on the screen, you get the DAX down 3.7%, the CAT down 3.3%, and the FTSE down 2.3%. Now, the FTSE is really intriguing. The reason being is that the FTSE was holding up. You know, it's only down about 1.5%. And bottom line is that somewhere, come on, let's get this baby up. There she is. And then at, let's see, so that was 6 o'clock in the morning that time. So as they, you know, basically got later in the day, the FTSE basically, you know, really gave it up. So, you know, we get some big action here, man. Inside the NDX 100, well, here, let's go to Microsoft first, MSFT.
Sure.
So
yeah.
Microsoft basically kicked it off after the close last night, folks. You know, Microsoft came out with good numbers. Their forward guidance, however, wasn't there. You know, Microsoft's down 780. You're trading at 205. I think 202 is the number. Yeah. So what you get with Microsoft is this. This is my take. I think the indices are going right down to the September lows right now. And in Microsoft's case, that's 196, the low, 203, the high. That is a cool way that Microsoft is basically giving us a heads up that the indices very well can make it to those lower levels. You know, so it's going to be a heck of a day. That's the real bottom line. So action everywhere.
That's for sure, man. I wanted to jump over real quick. I got the numbers up in terms of what they're dealing with because part of this having to do with, right, you might have lockdowns and restrictions, not necessarily even lockdowns, but just restrictions on the number of restaurants, the number of businesses, the number of social places in Germany, in France, across Europe. And I hadn't pulled up the charts myself and decided to pull them up in terms of the numbers. I mean, Germany, these spikes going on, man, you know, the exponential nature of these spikes is just pretty dramatic when you can go from September 28th under 2,000 cases a day to you're talking about 10,000 cases a day. So that's 5 times that just multiplied, right? In exactly a month to October 28th. So that's Germany. And France is even more remarkable, not in a good way. But you're now approaching 40,000 cases a day from pretty marginal cases early on. Deaths spiking, as you'd expect, on those types of numbers. You get over to the UK, similar action, man. You know, Europe has some really just far exceeding anything they've seen before, some of these countries. And then, of course, the U.S., you know, dealing with, we're coming right up to those numbers, and that curve is pretty exponential in its own right. So those numbers, man, I mean, they're stark numbers, and they're going to hit the economy, whether there's restrictions or not. And
And folks, remember something. If you're just listening in the car and you're not seeing the screens, remember this program's archived, because when you see those charts that Tommy just put up, I mean, that curve, man, is sick.
It's through the roof, right?
That curve, man, is a one-way curve. And
I mean,
in fact,
France.
what's interesting, Tom? When I look at the one you have, put that chart back up, Al, please.
Which one are you?
The one you just had. The one you just had. Because when I actually look at it, it almost looks like it did a 50. Not that one.
The U.S., the U.K.,
right there. That one right there. That almost looks like it did a 50% retracement from. It's just too far away from me. Yeah, from there, pulling back and then took off again. Do you see what I'm saying? If we take the low, going to your left, right there, exactly.
Sure.
You know what I mean?
Yeah.
So,
no, I hear you.
Yeah.
The run from early June.
Yeah.
To our previous highs. And then, these are sharp curves, man. And unless we start really curtailing things, I mean, the worry here, right, is that we're coming into winter, we're coming into Halloween, we're coming into Thanksgiving, unless there's a change of behavior, which hopefully we have. But that's what has to happen, man. Otherwise, these curves go through the roof. I mean, you see how quickly you go, in the case of France, from negligible in the start of August, and you're at 40,000 cases. I mean, you're 20 times the total that you had in early August. If you go 20 times again, you're basically through the entire country, Germany, UK, and then the U.S., of course. So, big numbers.
Yeah, there's no doubt. Let's take a look at some of the higher volume. Here, let me show you the ABC structure down, the larger one, folks, so you can wrap your head around this for a second. So we had that, we're in an ABC market down, okay? That's already confirmed, folks. We've already done one on the S&P. Last Thursday had broken the B, pointed an A to B, C, D down, okay? Now what we have is this. There's a much larger one that's in play right now. And what you're going to get is that you just take the highs of the high of October 12th. You take the low of, of Monday, Tuesday, Wednesday, yeah, a low of Monday, and you get a monster ABC structure on the way down here. And that's good. That price projection, what we need here today is you need volume of over 91 million for A to B, C structure to get firmed, and guess what? Your price projection is right down at approximately those lows. So that's where it looks to me that we're actually going. And if we go, and this is where a real heads up comes in too, because I think the Dow is already there. It is. So you can see the Dow basically led on that Monday. The Dow is trading 26,847. Well, the high of that bar is 27,09, and the low is 26,537. So pretty wild, man.
They're big numbers, man. I mean, you look at where we were in the Dow, on that October 12th, the high, you're talking about 2,100 points we've given up, man, let alone the S&Ps have given up 4%, right? You put the S&Ps just from the highs that we had at the beginning of the trading day on Friday, all right? We're talking about more than 4%. It's the beginning of the trading day on Wednesday. We just gave up 4% in the S&P like that.
Listen, man, there's no doubt. I mean, the way I'm looking at this right now, this market's taking a little rest right here. And, I can picture why people would think that, yeah, guess what, we're going to have some kind of a bounce. But guess what? When you have Europe that's still down 3.2 to 3.6, and we're only down 2.1 to 2.6, as Ahmed Basil Chapman would say, the day has just begun. Is that what he says? I think that's
the day is young.
The day is young.
It's very young.
The day is young.
There you go.
Dow down 614, NASDAQ off 299, S&P's off 78. Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 641. You get the Nasdaq off 322. S&Ps are off 84. And we got oil, Tom.
We sure do. So we got some EIA numbers. It'll be interesting to see how much of an impact they have on the market with everything else going on in the market today.
No doubt. So let's see. So it's crude inventories I'm looking for, right? Yeah.
Correct.
Right,
yes.
Okay, so we get the whisper number of build of 400,000. Survey numbers, a build of 1.5 million.
Okay. So I wonder if the number out last night, maybe a little less than...
CL crude contract. Okay, so we're down 223. Wow. This is breaking. This is going to be interesting, man. This is just like the market. Holy cow. Look at this. Okay, so your lows here are 37.12. We've hit 37.28. Wow. Okay, so, I mean, this looks to me like it's setting up to break this whole consolidation, man. You break that consolidation, you can go to 28 bucks on oil, man. This is pretty wild. Okay, so let's go back.
Not out of the realm, right? Not out of the realm. The way
it's not.
With everything going on, the market's selling off the way it is. The commodities selling off the way they are. Everything, like we said, is besides probably the VIX, notes and bonds, the dollar, a few in between, but that's about it going higher.
Okay, give me a number.
What are we gonna go for? We'll go for a rise of 100,000.
100. That's it, right?
That's it.
Okay, there we go.
I was watching Price is Right last night on prime time. They were giving away BMWs and Audis out there. Anyway, maybe
I love it. The Price is Right. There's a blast from the past, man. That's still alive. That program, folks, is like 65 years old or something. That's pretty amazing, man. That program. So picture, what's so sick about that? That program was on when I was really a kid, really young. And,
I bet.
And that's when TV was only on, folks, from 7 o'clock in the morning to either 10 or 11 o'clock at night. Could you imagine that? Think about that for a second. I remember sitting in front of my TV, and they have a clock, and the clock just goes round and round. I just sit there waiting for the Three Stooges, man.
You ready? I pulled it up. It started 1956 as a television game show hosted by Bill Cullen, and revamped in 1972. So there you go, man. 6 years old, hanging out.
Isn't that crazy?
It is crazy.
I got to tell you this crazy story quick, folks, because this would end up happening at one of these. My mother and father, on a Saturday morning, went out and bought brand new furniture, right? And you get a picture. That was a big deal. All right, do you know the story? I think you know the story.
I can't remember it. I feel like I've heard it, though. The furniture piqued my ears.
Exactly, exactly. So I'm 7, and my sister's 4. Yeah, she's 4.5. And we always had a good time. But anyway, she got the new furniture in. We get up, we're all excited. And so my sister's name's Colleen. And I says, oh, Colleen, you know what we got to do? Let's go get a knife. And we got to put our initials in the new furniture, right? Swear to God.
It's a natural thing to do.
Oh, my
Definitely.
God. So, you know, it was great furniture. And you had real wood then, folks, okay? You know, like on the sides.
Sure, right,
so
yeah.
we carved our names in, our initials in, right? You know what I mean?
That's how you break it in. That's right.
We're sitting there watching TV, and my parents get up. Oh my God! They didn't kill us, thank God.
Thank God. Yeah.
I couldn't believe it. I
Kids,
mean, there was still
what are
the
you gonna do?
sawdust. They're taking the sawdust off. My mother's looking at my father. My father's looking at my mother, saying, "I don't believe they just did this, man."
Exactly.
Oh my God! Look at this.
I never did anything like that ever, man. Growing up, Never.
No, you actually didn't. No,
I don't know.
Not that
sure.
one anyway.
I had my
you have
moments,
plenty of stories.
Exactly.
Oh my! And that's Southie. Yeah, that's South Boston. All right. That was a normal occurrence, I think, man. I don't know where my head was at 6 years old. I got to carve my name. I think we carved our name into everything, right? Yeah.
It's too funny. It's the mind of a child is awesome. So there you go.
Yeah. So now we're on Wednesday. We're coming into tomorrow, right? Tomorrow is a monster day.
It doesn't get much bigger, man, right? You got the GDP in the morning to kick things off. But even, all the company, I'm going to pull it up here and as we talk about it. But the companies, of course, the top line are Amazon, Facebook, Google, and Apple. Doesn't get much bigger than that. But you also get a bunch of other companies. I'm pulling them up. I mean, you get Shopify tomorrow morning, I know is one that comes to mind. Let me pull up some of the others real quick because big numbers, 186 companies this week, right, of the S&P 500 are reporting. So one of the biggest weeks, Thursday, the biggest day. But yeah, Yum Brands tomorrow morning. You get Newmont in the gold sector tomorrow morning. Molson Coors, Moderna, Comcast, Kraft Heinz, Dr. Keurig, Dunkin', and Overstock all before the market. And then you get those big four along with Starbucks, Activision, Cheesecake Factory, Shake Shack, Twitter, Kellogg. So that's all tomorrow, man, along with the GDP number in the morning. And really interesting to see what's going to happen on Friday, as in is everyone going to say, hey, listen, the market's going to be fine. No matter who gets in there, we'll get some stimulus. This is an overreaction ahead of a very volatile election, and I'm not going to wait for the weekend. I'm going to buy it since we're down, 6% in 16 days almost in the market.
I'm telling you, the way that I'm looking at it, Tom, right now, and folks, I think that this is the deal, meaning that it's going to be wild. If we go down right into the election, I might be going long before the election, man. If this comes out,
I could be right there.
This is how this seems to be setting up. And that would be saying, folks, that there isn't chaos. That, the bottom line is that this is a correction because guess what? Shops aren't opening and shops are going BK, folks. Okay, so, regardless of, how these stocks have gone forward, well, guess what? In the long run, you got to make money, man. That's the bottom line. And,
I mean, I put out an update today, and just one of the things I literally said, I just pulled it up. We're now approaching prices and some of the equities on the radar that could begin a partial position potentially before the election. Because, you're getting these pullbacks. There's a lot when it's, you're talking about, and especially as we're coming now right down to the lows we had in that previous S&P. I mean, quite a trading range from basically 3,200 to 3,550, and that would bring you all the way back, which is crazy, to like June 9th prices. But you think about it, the run it had, it's not the end of the world. I don't think anybody would have said it's the end of the world when you trade from 2174 up to 3,200 and you got to consolidate for 4, 5, 6 months or something like that. before you can really.
Now, and what's really cool, folks, check this out. If we were talking with Kevin about this yesterday, okay, about bottom line selling puts, right? The VIX is so high right now, folks, and the market's already come down. Like an equity that you'd like to buy, you might get it, you might not get it. But the bottom line is that because the premium's so large, you can sell a put, and hopefully you're saying, I want to buy it, okay? And
yes, that's
like
another way for sure.
You. It's amazing.
It's great.
I mean, it is. It's huge. It's, yeah.
The only, because I'm considering that right now for myself, for my newsletter, man, for everything, because it's real, is that you potentially miss getting in that equity, right?
Yes, yeah.
That's your one variable you have to factor in. So,
but you still make money on a short
No, because
term.
you don't want to be in all the equities, right? So but if you don't have the strongest conviction that you need to be in that equity, it's an automatic return if you don't get into that equity anyway. Yeah.
Right. Dow down 747, Nasdaq off 336, S&P's off 94. We'll come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates to my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down to 765. You get the Nasdaq off 349. S&Ps are off 97. So percentage-wise here, let's see where we're at. We hit the 3% mark in the Nasdaq, 3.12. S&P's 2.3, and the Dow at 2.8. Let's go back over to the Whisper number. Let's get these.
I don't think it's going to be under Whisper anymore. Maybe just jump to news or.
Yeah, CL. Yeah, I'll get the contract.
They take it away from you once it comes out.
Yeah, that's right.
Man, quite an accelerated market though. As we're waiting for the oil numbers, 100 points almost on the S&Ps.
Look at the rise in oil. Oh my God, 4.32 million barrels.
Maybe oil's going to that. What did we say? $28 or something?
Yeah, that's pretty
there
intense,
you go.
man.
We got 4.3 million barrels. The price of crude not really reacting in a big way right now. We're at 37.16, but we basically are at session lows in this. We're looking at 15-minute bars on my chart. 37.11 just made as we got that number, and quite the max pain that contract is already experiencing with a little bit more oil than the market thought. But I think that market a lot more worried right now about Europe shutting down and America potentially, at least some states, clamping down on some of the restaurants and like. I just pulled up just for instance.
Well, Chicago. I mean, all our friends in Chicago. The bottom line is that they have trouble and they know it, man. I mean, and now it's cold. I mean, I saw Dan. Did you see Dan? Our man, Mr. Dan Cook, folks. He the poor guy's inside his house. He bought one of those golfing things. Those
golf simulator, man. Yeah. He's making do.
Exactly.
It's probably
a good
time,
man. Yeah,
that's what I was gonna say. It's a good time to be selling those types of items, video games in the system. Speaking of, Xbox, they're coming out soon. I know that Fast Market yesterday they were talking a lot about the Xbox. Probably going to be a strong sector in a big way. Those Microsoft numbers, just touching on them, they were strong across the board. The guidance was that the market was looking for about 40.5 billion for revenue for the next quarter. And Microsoft said they're going to come in between about 39.5 and 40.5. So pretty close. You don't want to see that, especially when you beat this quarter. But they were down pretty substantially. Just kind of talking about that. Some of these equities so lofty coming into earnings that they're still doing fine, but those earnings are priced in, man. You better be crushing it when you're trading at some of these levels right now.
Yes, and the thing that when you're looking at Microsoft, folks, is that on the way up, Microsoft was one of the strongest equities, if not the strongest equities, inside the NDX 100.
Sure, definitely.
So we got our first bounce out here. And it's a tiny bounce, folks. Okay. So now we're going to see, what it's made out of. That's what this is. The thing is shaking. Okay. So if we bring this up, what you're going to see, this is tiny, but this is the first,
reprieve of the slide.
At all. Yeah. Zero. Okay. And now here, let me put this way. And I'm telling you, folks. Okay, just be careful. I know that we've come down so far that you say, okay, I want to play this bounce. I wouldn't be playing this bounce. What I'd be doing is let this thing bounce and sell it again. Because guess what? This is one of these markets that are really dangerous, man. When they fall out of bed, they can fall out pretty substantially.
And where would that change at all? Would it change at all at some point? Could it change? Or you know what I mean? As in, is there an area that this...
I think this bounce here. So I got the NQs up, right? I mean, I think it's going to be a good bounce. I mean, we are at we hit a low of 11,208. This thing can bounce up to right there. I mean, it can go back up to ice, which would really blow people's minds.
Right around the open, even
11,344. Yeah.
And then would there be? Let's say you could just keep getting extension even down today or the rest of this week, or how it trades lower.
My take is that I'm going with the larger ABC structure on the way down in both indices, and the larger ABC that's the what you're hearing from me is that we're going after these September lows. That's you see what I'm saying?
Okay. Yeah.
So
right. No.
What
for sure.
happens on a day like today, folks, is that if you're short, you should be covering right now. That's the bottom line. When you get a gift like this is like I don't care if it goes down another 100 S&P points. Right. Okay. And then then it's going to be the patience game that is really hard to do on a day like this too, because it's like, okay, do you only get a 0.382 bounce? Do you get the real deal happening? It's all of the above.
There's still the possibility, man, that we have a decent wait on election night for a day or two for the results, man. So if we come into that and that plays out, it's probably not likely, but it just needs to be one of those states that has to start counting ballots on election day that they've received by then. If they happen to be in play and a decider. it's going to be a day or two, and that's the market's just not going to like that at all.
Yeah, get plenty of sleep before the fact, folks.
Totally. That night for sure.
Yeah. There's no two ways about that. The thing that's really wild, think about this, Tom and folks, is that all we've been talking about is the last 3 weeks is the stimulus, and you can see that, yesterday's news is today's garbage. We know the stimulus is gone. I mean, it's not here.
No. And that's, combined with the numbers going on, the fact that there's no stimulus, and the fact that you're going to have, at least in Europe, shutdowns, and in the States, you can't deny the fact that as these numbers are spiking, man, it's going to impact people's economic activities and what they do. I was going to mention, I had just looked up and I wasn't completely aware. Boston, if you fly in from Boston, you need a negative test that you've had within the last 72 hours. Otherwise, you need to self-quarantine for 14 days. Same thing in New York. And those are for a number of different states, that where the numbers are higher. It's like 95% of the population right now would qualify as having to have that happen because of where they live, where the numbers are. That type of testing, though, is not so readily available that, you just get it done. It's super easy. So then that becomes a problem. If you do want to travel up there, you have to make sure you get a test. It has to be within 3 days of traveling. If not, you got to get up there. Then you got to get a test when you arrive there. It's very cumbersome.
I mean, this looks to me like it's the playbook right over again of the first deal. Europe got hurt first. Bottom line, only took 2 or 3 more weeks that, we see our cases going up, and the bottom line is that, it's out here, and unfortunately the winter's coming. So what happens there, of course, is that there'll be confusion as to, do you have COVID, do you have the flu? And where that comes in play, of course, is that, older people will go to the hospital. I mean, if I've seen anything, even in Florida, folks, what ends up happening without any vaccine, without any COVID, winters in Florida, in hospitals, you walk in there and you want to run out because there's a lot of old people and they're all there because they're worried that, the flu could take them south, basically.
Sure.
You know what I mean?
Yeah.
And so it's...
Yeah.
Dow Industrials right now down 721. You get the Nasdaq off 316. S&P's off 98. Boeing turned around and let 11,000 more people go. Big number, man.
Yeah.
Oh, well, actually, is it 11,000?
7,000, I think, but more. Yeah.
Yeah. Big number.
Yeah, and they're dealing with some woes.
Can you imagine that? That's the 30,000 people. And you're talking about good jobs here, man. Oh, this is sad. That's more than COVID,
they basically they said they were going to trim the workforce over the course of the year, basically from 160,000 to 130,000, and that might be a part of that number. Yeah.
Dow's off 720, Nasdaq's off 315, S&Ps are off 90. Stay right there, folks. Teddy Kaczak coming right up.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's down 742, Nasdaq's off 322, S&Ps are off 92. Let's go over to our man, Mr. Teddy Cakestad, as we do each and every Wednesday at 40 past the hour. You can reach Teddy, folks, every trading day at forex-trading-unlock.com. It's forex-trading-unlock.com. Ride 'em, cowboy, Teddy.
How you guys doing today? We got some really good things to talk about when it comes to the currency markets today.
I like
Morning,
it.
Teddy.
Let's go. Let's do it,
Well,
man.
do you want to start with Asia or you want to start with Europe? It's
Wherever
your choice.
you want,
tell
man.
me.
I'm wide open here.
Okay, well, why don't we start with the yen? The yen has obviously been in a bearish market with the dollar, okay? Now, it made a lower move low today, okay, confirming that it's still bearish.
Yeah.
It's kind of looking like a nice little bounce. It's because of the dollar rally. I think it's getting a little bit of that this morning. But I would be careful with that. Unless you get a rally above the 105.05 area, I don't think you're going to get an upside breakout in any means. And even if you do, it'll be a neutral, not necessarily bullish breakout. I think that if we test that 104 level again, which we're not too far away from, that you're going to see that continuation of the downtrend. And I really think that the U.S. dollar yen trade is going to maintain a bearish posture for even through the election. Okay, and that's the only currency I think that you can kind of count on right now as far as technically trading and fundamentally without being so news driven. Okay.
Yes.
Now in that same trading zone, now we have the Australian dollar and New Zealand dollar. Now we talked about a month and a half ago how we had the initial divergence in currencies would help. It started to have them free flowing again, where they weren't just trending one way against the dollar or with the dollar, you know. So now we have this divergence that's kicked up the heels and whatever. We're coming into the elections. So now where the yen, I think, is the stable one, the Aussie and the New Zealand dollar, two totally different things. Australian dollar, US dollar, it's a bear right now. Okay, so unless you get a rally above that 71.55 level, I don't think you're going to have even a neutral trade with that one. Okay, because Australia is heading. They have a lot of issues with the coronavirus, and then if we have shutdowns globally, especially, they're going to get hit hard. You know, and then it comes to the commodity things. Oil is now. You got Libya that went back online this week. That's another 1 million plus barrels a day of oil coming back into a market that they're looking for lower demand. Okay. So this doesn't bode well for the Australian dollar, US dollar. So for those traders who are leaning on the Aussie currency, well, no matter what cross it is, I would not look for very much strength in that currency, at least for the next few weeks into the next couple months, you know, and especially if they take out that, the 70-20 level, I think you're going to see a free fall. Now, New Zealand dollar, not the same case. That's been in a bullish market, at least in the intermediate and short run right now, and it's choppy. And I think that's because of the election. And I think you're going to see more of the same with that. And today, be careful because it made a newer move high, but it's setting up to have a bearish engulfing line sell signal as of the close today. So like if it was to close right now, the New Zealand dollar, US dollar, I wouldn't say that it's a bear, but it's probably set for a short-term correction. So now let's move over towards our side of the world. We have the US dollar Canada, which has been a bear and all of a sudden had an upside breakout today. So now we know that trending markets are either higher move highs and higher move lows for a bull or the opposite for a bear. So now we've come off a lower move low and we've made a higher move high in the Canada. I think that because of the elections and just because of the current dollar strength right now, since we've had this bounce since last week, that's what you're seeing there. So I'd be very cautious trying to be a seller and jump into that. You know, before I was a sell rally guy for the US dollar Canada. Yeah. Right now I'm off the table for the next couple weeks. So so there's divergence there. So I'd be very careful trying to, like I would look to buy dips right now in that. Now let's go to Europe. Europe, we know, is definitely falling into the coronavirus thing. As far as the shutdowns and who knows how that's going to go with the economy, we know it's kind of like deja vu from 6 months ago. I would think that it's probably going to be more of the same going into the holidays. I mean, in Chicago, as of today, there's no longer any more indoor dining.
I know.
Even in Cook County, the whole county, even in my suburb, can't do it. So we're going full throttle back into lockdowns in Illinois, and it's even going to be more extreme measures than before. You know, so I mean, while this happens across the United States, this is going to definitely impact oil, all these other things, and you know where that goes. Plus, the stock market, the S&Ps, they topped out on the 13th of October, and they've been pricing in a Biden win. I mean, you can tell by the sector rotations about what's going on now. Oil stocks were getting hit with stable oil prices before we started to get this oil panic again. You know, all your defense stocks have been getting hammered for the past month, you know. So I think that right now with that Biden pricing in the election, now you add COVID on top of it, you have flight to quality starting to happen a little bit in the dollar, and it's starting to show against the European currencies especially, you know. So you had the euro, the US dollar, or the euro US dollar and the pound dollar that were trending higher against the dollar for the past couple months. Okay. Now we have a sell signal that occurred in the euro US dollar last week, and now we have this nice little sell-off. Okay, now the Swiss is not moving as much as those other two currencies are. So, but I would be very leery of trying to buy the euro US dollar right now over going into the election. I think it's going to be very choppy. It's not necessarily that today's sell-off is indicative of a turn in this currency, okay? You know, because when we talk next week, hopefully we'll know who the next president, or if it's going to be Trump again, whatever, and we don't have too much chaos. Who knows? You know, we're not even going to try and forecast that, right? You know, so, but between now and then, you have these extremes that you're coming into, and I think that the volatility, even though it's going to be there, it's going to be very sideways and choppy. You know, like the algos, I think, are going to have a field day over the next week. Yeah. You know, because the more the polls come in, people are going to be like, oh, Biden's winning, or they think Trump's going to win. You're going to see these people, they're going to start lining up their bets. And I think most of it's already in there. But if we have any surprises, you know, like, you know, right now with the coronavirus spiking and whatever, I think you're really going to push the extremes with the equity markets. I mean, I was in the S&Ps for years, you know that, and like, I mean, I would sell that market every single day. It's a natural thing for an S&P guy. But right now, I'm very bearish the S&Ps right now, at least for the next week. You know, I cannot see.
September low's a game, man. That's the bottom line. Yeah.
Right. Exactly. And when you think about the shutdowns, I mean, and I was looking at the metals, like gold really isn't popping yet, but you look at the treasury bonds. Remember how we were talking about how the short terms, they're locked at bid because there's nowhere they can go. They can't break. Not with 1 year, 2 years, and euro dollars can't go down in price when they know the Fed is staying locked for at least a year. They just won't break. But the 30-year was dipping. And then, last Friday it set a low, and they had a buy signal there. It's got a piercing line buy signal. And remember I said for the past, like, since the summer, I'm like, I'm the buyer of the bonds. Just wait for it to break a couple handles and then get long and wait for it to snap back, you know. Yes. And it was pushing that extreme last week. And then last week with that buy signal now coming into the election, the 30-year is ramping itself back up, you know. And that's, remember we were talking last week how the spreads were getting so wide.
Right? I mean, they were below that August low, what, 2 days?
Right.
48 hours.
It got down to 172 something.
Yeah.
And now it's up to 174 something.
Right.
And most of your viewers are probably not bond traders. They don't realize that a $2 move in the 30-year, that's a big move.
Monster. Yeah, right.
It's monstrous. Yes,
Right.
absolutely.
Right.
So, but that's my take on where I think things are going right now. It's going to be choppy. I would just be very cautious with the European currencies as far as getting overly bearish yet.
And folks, you can reach Teddy every trading day at forex-trading-unlocked.com. It's forex-trading-unlocked.com. Teddy, you have a great week, safe week. Sad that you guys are locked down again. Bottom line, you got to stay safe, though, man. And
Can't go out for it snowed yesterday, so you can eat outside in the snow now.
Oh, my God. Have a great one. Tommy and I come right back,
care.
folks.
Thanks, Teddy.
Take care.
Back in the day, I joined the Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom and Tommy O'Brien. We do appreciate you growling and prowling with us. Now, market-wise, folks, if you're day trading, here's the bounce, and you can play this bounce. Let's look at this quick. What you're going to see here is that we just broke the lows, and the way that I always look at this is that it's just how you're breaking them. And the bottom line is that there's no more sellers down here. So we just broke on the E-minis, we broke 32.81. We had 80,000 contracts on the break, on the first bar, which is at 10:20. When I said that, you don't want to trade that. Now what's going on, you only get 36,000, folks, okay? So you should basically get a bounce going. Now, if you do this trade, you got to keep this thing tight because the bigger action is down. But you're going to see it inside the Nasdaq also, and the composite. I mean, the NQs. That first bar was 18,900. The bottom line is that you're 5 minutes into it right now, and you only have 10,000. Now, if you do this, you're not looking for big dollars on the way back up. You're basically scalping it, So we'll see where this baby shakes out. But you're in the larger ABC structure down. That's what you got to remember. Fast fingers, the name of the game out here.
Hey, that September low, man. We're only 80 about points away from there, and we're down 100 points in the S&P right now. So you better believe it's in game. Yeah,
there's no doubt. And if we go over, I believe the Dow is probably very close to the bottom. Oh, look at okay, man. The bottom is 26,517. No, 537, and we've made 26,583. We're going for it. Oh, now it gets cool.
Look at that.
Yeah, you break this, folks. I don't think we'll do it today, but you break this, guess what? We're going lower right into the election. Probably.
And we got the VIX. VIX is over 40 right now.
Wow. Stay right there, folks. Think of Swim coming up next. And I'm Mr. Basil Chapman, Steve Rose, Dave. Wait, I'll be back this afternoon. Thanks, pal.
Thanks, man.
Whee!